Hello, Smart Money 2 podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. And today I'm joined with Phil Weiss. Hey, Phil.
Hey, Kirk. Good to see you on this somewhat warm Friday compared to what we've been having.
Yeah, I can't wait for those ice dams to flood my house like they did 2 weeks ago. It's going to be
Oh, no.
glorious. Joys of home ownership.
Yeah.
Yeah, it's good times. Good times. Well, I've learned all the things not to do, and I can tell you if you ever have ice dam problems, please call me because I know everything about ice dams. I'm
Will
now a
do.
world-renowned expert.
Yeah, my worst experience when we first moved here, we are on wells and we lost power for 7 days. And when you have well water, you don't have any water when you lose power. And that's why we have a generator. That was what my big learning was from that experience.
That's on my list of things I need to do. Um, yeah, it's funny. There's a website. It's called despair.com. It's been around since like 2000. I found it then. It is glorious. It's like those motivational posters, but these are demotivational posters. One of my favorite ones is a picture of like a ship going down, like the Titanic, and it says mistakes. I'm going to see if I can actually pull this, and I'm going to share the screen because it's glorious, and hopefully they won't sue me because I'm giving them credit. But yeah, it's called. Come on, there we go. What the hell? There we go. Mistakes. It could be that the purpose of your life is only to serve as a warning to others.
There's been times I felt that way.
A lot of wisdom in that. A
Yes.
lot of wisdom in that. I am that mistake. So if you want to learn something, just ask. I made it.
Yeah.
Oh boy. Yeah, we had a bucket crane to get all this. We had a foot and a half of snow like a few weeks ago, and they brought a bucket crane over to pull all the snow off because my house is tall, so I can't get up there, and get a lot of weird roofs. And anyway, no way I was getting up there. Even in my younger years, I would have said no. Yeah, my buddy's like, just get a roof rake. I'm like, I don't think they make them that long. I'm pretty sure it's not going to work. Anyway, so yeah, the two solutions for ice dams are A, rake your roof, make sure there's no snow up there when you have a lot of snow. Little snow is fine, but a lot of snow. And the second one is make sure your roof is well insulated, because the reason you get ice dams is because you have heat escaping, heating up the water and then freezing it, and that's what caused the ice dam. So you need to make sure that the roof is well insulated so the heat doesn't escape. And we're gonna have to go through all this, but anyway, that's everyone says like, oh yeah, that's the solution. So
Yeah. It's funny you say you didn't do that. The first house that my wife and I had after we got married, it had a spot. It was a center hall colonial, and where the roof to the right of the center hall and where the center hall part was, there's this big gap, and leaves would get up there. And the only thing that was worthwhile that my home inspector told me was you have to get those leaves off the roof. So I used to go up on my roof with a leaf blower, backpack leaf blower, and I'd blow all the leaves off. And I had to get a taller ladder because the first ladder we had was only 6 feet, and I could get up fine, but when I'm coming down, I'm like putting my foot trying to find the top of that ladder, and I wasn't quite sure that I was hitting it. My wife would have to guide me. I said, "Yeah, enough of that." So then I got a taller ladder that I could then reach. It was 8 feet instead of 6. So when I put my foot down, I knew exactly where it was, and it felt a lot better. But I used to go up on my roof with a leaf blower to get those leaves off because same kind of thing. If it rained and they got wetter and then they froze, right? We would have a leak in our living room.
yeah, I mean, all these things are just you only
The
make a
joys of
mistake
homeownership.
once, right? Joys of home
Yeah.
ownership. All this stuff, and people are like, well, you have to learn to do this yourself. I'm like, yeah, that's this. I had this running joke that owning a home, it's like starting another company. So I've got a few companies, we do different things, and it's like I told my wife, I'm like, this is literally like starting another company. The amount of work and time and planning and effort that goes in, it's like running a company. Like, what's time for this shit?
Yeah.
Um, yeah,
I get it. That's why we've decided that when the kids are done with school and they've all moved out, we're moving somewhere else where all those things get taken care of
condos.
instead of because arranging for all that stuff for your house. Even if you don't do it, it's still a lot of work to find the people to do all the stuff that needs to be taken care of.
Yeah. So before this, people on the podcast know we rented for like 5 years, thinking we'd get a dip in real estate, which we didn't get. But anyway, so before that, we owned a condo. It was great. We literally worried about nothing.
Yeah.
Nothing. It was studs in. That was our responsibility. Anything in there, that's my responsibility. You know, if the water tank leaks, that's me. But if you wanna make sure you de-ice the sidewalks, you wanna take care of the garage. You want the carpets in the hall, like, vacuum. Not my problem. The association deals with that, right?
Right.
I just have to deal with inside. It is so simple. So I understand why people, when they retire, do this. It is the easiest thing in the world. I imagine if you have a house that you understand the mechanisms of it, you're probably fine with it. But frankly, if I could just go in and just pay somebody a few $100 a month and not have to worry about a damn thing, it's worth it. It is totally worth it.
Yep.
So anyway,
Yeah, I had that before my wife and I bought our house. I had a condo, and it was the same thing. Studs in was all I had to worry about. They had everything on the exterior. I didn't have to worry about arranging for any of it except for shove. It was a townhouse, so I had to shovel my driveway. That was it.
yeah, yeah. Anyway. I think the listeners of the show are getting to know all my house problems because every week I get a different one, and we always talk about it. So, but I think the good thing, the reason I talk about it is because you learn these things, right? I didn't know about ice dams. I knew they existed, but I was like, whatever. But now I understand. Like, it makes sense, and now I won't make that mistake again. Um, but I will tell you, it was not that expensive to get a bucket truck to come in and rake off the roof. I thought it. I got. By the way, here's another thing. This is finance related. It's personal finance related. Here's another thing I found. That if you're looking for a tradesman, like whatever it is, getting the snow off the roof, or landscaper or plumber or whatever, there's an interesting trend online where if you go online and look for ice dams, you're going to see probably 5 companies, and they all have the same phone number, and none of them are an ice dam company. So I've heard about this, but I saw it firsthand in ice dams, because if you actually look this up, and I'll call these guys out because I don't know if it's bullshit, but I suspect it is. It's like icedamguys.com or something like that. And they've got all these videos, and they're like, oh, look, we were in the media, and, blah, blah, blah. And they're, oh, we're in like 10 states. Well, so I call up, and they're like, oh, we can get there same day or next day. Well, I had to leave a message, and of course, they didn't call me back. They call me back the next day. And they're like, oh, we can get out there, and it's $875 an hour, and there's a 3-hour minimum. 3 hour minimum.
Jeez.
Talking about 3-hour minimum. Like, okay. I was like, whatever. I didn't know any different. Those were the first people I talked to. So I called the next person on the list, and it was literally the same phone number as the ice dam guys. The only reason I know is because the message was the same. Like, what did I call the wrong one? Like, oh God, they're the same number. I look at I wrote them all down. There's 5 numbers on the list. They're all in like top search in Google. Every single one of them has the same phone number, and it was a local number. But the guy who called me back was in Minnesota. And I talked to him, and he's like, yeah, we got this. And I was like, you're in Minnesota. You doing Massachusetts? He's like, oh yeah, we got people everywhere. Anyway, so come to find out that this service, as well as many other trade services, so what they do is these companies go out there and they get high ranked on Google search, and they overcharge you, and then they go find. I know it's inappropriate to say this given all the goings on in Minnesota, but you get some, cheap labor immigrant that does it for $5 an hour, and they charge you $800 an hour. And then some guy who doesn't speak English shows up to your house with with a flamethrower to melt the snow on your roof. And you're just like, what there's no insurance. The guy's just like, throwing rocks at the snow, like that kind of a thing. Like, I'm sure the guy's a great guy, but this isn't exactly like, oh, we have insured, we're bonded, and we've been doing this for 50 years. It's like, no, I found Tito over there in the street. He needed some work, and I just said, here, go get the snow off the roof. Like, that's basically what's happening. And it happens in multiple trades. So when you call up, and it was not the only reason that this clicked is because I saw the few numbers together, and I realized that these people aren't local. When I called in, they had some other guy, and it was just like, all right, this is shady. So if you're ever calling for a service, like a trade service on Google, you have to really be careful that you're finding somebody local. You're not finding somebody who finds somebody, because then they're just trying to get the spread of what they charge you and what the actual service
Right.
is. Now, I wouldn't mind that so much, except for the fact that from what I've read, is that they don't hire quality people. They find the cheapest person possible who's probably not insured or bonded. So if they screw up, who are you going to go after? Tito? Tito doesn't even live here, right? Tito's, not even supposed to be here. Like that's the problem that I've seen is out there, and it's I guess it's pervasive. So you have to really find a local company, and so I went out and I found like a few local people, and I asked, and they found local. So it's kind of like you ask somebody who asked somebody, you're like, all right, here's what's going on. So I mentioned this to the guy who came for the ice dam leak, and he's like, oh yeah, he's like, don't ever use Google for these kind of services. You're just going to get garbage. So I guess it's a well-known thing amongst the trades, which is surprising because the tradespeople aren't advertising. Like I couldn't even find anyone for ice dams outside of these ones. They're obviously the same person. No one else showed up. Who are the people you call? Landscapers will do it. Roof guys will do it, but they don't advertise this service. Like why? It's beyond me why they wouldn't do that. But anyway, just a experience here. Hopefully, listeners can learn from my mistakes and don't make them yourself. If you're smart, you won't anyway. So
I did not know that.
yeah, I'll tell you, you learn a lot by making your own mistakes and just digging into the weeds I was kind of freaking out because we had a leak, and it was right over my son's room, who has sensitivity to mold, and of course there's a leak in the room with the kid who has mold issues. Like good, that's perfect. Like someone's out to get me, like the greater being up there has it out for me because I'm not learning my lesson some way, and I need to repeat this over and over again.
I will tell you, I use Google in a different way for something like that, where like I said, we have a well, and we had our water pump replaced, and like a year later, the new one broke, and we ended up getting something. It was still under warranty, and the warranty should be honored no matter who fixes it. And the guys that originally did it, they couldn't come as quickly enough. You have no water pump, you have no water, so we needed somebody right away. So that somebody else came, and he overcharged me, and he charged me for the pump again, like for the parts. And so I went onto Google and I lambasted him in a Google review. I will tell you, within an hour, I got a call from him saying, first, like, why did you do that? Because this is what happened. I know you overcharged me because I had a warranty and you didn't take it into account. He said, I'll tell you what, I'll honor the warranty and give you, and he gave me back a lot, even a little bit extra, if you say that you talked to us and we corrected it in your Google review, because they didn't want that bad Google review sitting.
Yeah, it's a big deal.
Yeah,
it's a big deal. It's good. I mean, that's what should happen, is you have this social pressure to do the right thing. So when I looked for a chimney person, because when we got the house, we had everything inspected. One of the things we looked at was a chimney, and so we got a guy in, and it was really hard to find a chimney guy. Like there were probably 10 in the local area, and Boston's a pretty populated area. There's only 10. Only one that dealt with gas inserts, which is weird. So of course they overcharge. Everyone even said, well, this is one pick, but they overcharge. I'm like, is there anyone else? We're like, not really. So we went through that whole thing. But as I was researching it, I was looking at the Google reviews, and a lot of them you could tell the people who were not on Google because they were getting bad reviews and they didn't respond. But some people were very responsive. They're like, this person's a liar, A, B, C, and D. And I talked to this person, and here's their response. Like some people are very up with it, and you can see it, and you're like, okay, I respect this. Like sometimes the customer's an a-hole. Sometimes there's a mistake. Like I get that. Like no one's perfect, but the fact that they're on there and they're trying to do that, you can get a sense from how they respond if the vendor's a scumbag or not. Sometimes, like your experience, like you see a bunch of these and they're a scumbag, and if somebody complains, then they'll give it back. It's kind of like, all right, I don't want that person. But sometimes you see it's just like it was an honest mistake, or this customer's clearly a jerk, and here's why, and here's the email. Like here's the email that we sent, here's the email they sent, and you can make a decision for yourself. Like, okay, I like that. Like I can at least see what's going on. So yeah, I think it's important to do all this stuff. It's definitely getting harder to find quality people.
Yes.
I don't know if you've noticed this, Phil, but the quality of service professionals, and I don't mean like, attorneys, accountants, and advisors. I mean, like including tradespeople and other people. Like the quality of service is just going to hell in the
It is.
last 5 years or so. It's gotten a lot worse since COVID. I don't know. Have you seen that too?
I have, and the other thing I've noticed is like some of the people that we work with that were quality, they've kind of given up and they don't want to do it anymore. And so now you're left with even worse choices because the good ones have just left. So and the bad ones remain behind. It's really unfortunate. And to the pricing, like I've noticed, they look at you, where you live, and
Yeah.
they'll decide, oh, you live in a nice neighborhood, we should charge you more. And so when you call and get quotes, you can always tell which guys are doing that because their quote will be very different than somebody else's who's just pricing it more for what the job should really cost.
Well, a secret to that is what you have is if you have an office in an area that's less well-to-do, which, typically if you're not like commercial offices and more like industrial areas, like in our area, it might be like Framingham, which is tons of retail, highways. There's some nice places, but it's a little both. So if you're in like a nice town, you're like, yeah, I'm where are you from? Like, oh, I'm from this town. And, I always do stuff like that. I always give them like a lower socioeconomic town so I can get an honest quote. And they're like, why doesn't this match up? Like, well, you asked me where I was. You didn't ask me where the house was. Because at the end of the day, it shouldn't matter, right? But you want to scope those people out. I could tell you that just from my work with like the heating, like we have to replace a heating unit, an air handler, which is fun. And we've called a lot of people, and you can tell like some people are like basically pulling you over the barrel, like clearly, and you see the difference in the pricing, and you're like, all right, I'm never calling you ever again.
Yeah.
And some people just get away with it because they can, right? And it's not like a peak service kind of thing. It's more like this is something you could do in the next 3 months, so it's not peak service. It's but you're clearly taking advantage of me. You know that you're just trying to upcharge me. I will literally never call you ever again. I did this with the heating because at first I didn't know who our people were, so I just called anyone, and this guy basically double charged us, and I was like, "F this guy!" Like I'm not, like gave me quotes, and I was like, "I'm never calling you again." Like this is
Yeah.
ridiculous.
And what they don't realize, like I remember when we moved here, I didn't know who to take my car to. And I had something happen with my car and somebody recommended a place. And I thought it was going to be really expensive and it wasn't. And they were honest. And so we moved here in 2003. We're still using the same mechanics when we get our car fixed because they were honest. They didn't overcharge us. Like when we keep our cars as long as we can. And if they need parts, like they might go and look for like used parts or whatever for things that makes sense for. And we know that we can trust them. So by charging the right thing from the beginning, they've had a customer for over 20 years.
Right. Yeah, I mean that's business 101, right? Keep your
Yeah,
customers happy, and I mean the people we use now for the heating systems, like they charge us like 40% less than other people we've talked to. Now the downside is they also sell heating oil, and theirs is like 20 cents a gallon more than other people, so I just don't use them for that. They try to rope you in, and I'm like, no. Like, why don't you guys just charge less? You don't need that much profit, but I get it. They make it up in different areas. But at least with the service, they're honest. Like, came out a bunch of times, they don't charge you for it, and trying to figure it out. But those are the people I like. Somebody you can
yeah,
work with. Like, you got to make money. I totally get that, and I want to pay people what they're worth. But like, if you're going to come out and do a shoddy job and then overcharge me, like, f you, buddy. Like that's not cool. But yeah, that's how you learn. And look, I mean, that's how people get referrals, right? We
that's
have
right.
we have house cleaners we got, and how do we find them? We literally asked our friends in the area, like, who do you use? They're like, no, we use these people. They have been phenomenal. You got these four Latina girls that come in and clean the house, and they are lovely, and they're just so quick, and they do a great job, and they're off to the next house, and it's a system, like, but everyone uses them, and they're just so good, and they're so pleasant, and just so friendly, and like they're petting the dogs, like, no, 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 she stole this, and they're like, don't worry about it, the dog's fine. But like, like it takes you, like, that's how businesses should run, right? You just ask
Yes.
ask the people in the neighborhood, like, who do you use, who works, and And anyway, I know we're getting off the business, and this is an investing podcast, but I think from a personal finance standpoint, it makes sense to do this kind of research because you don't want to get steamrolled. It's so
Right.
easy to do, especially now. Even with all this information, it's still hard. I'm not an expert in plumbing or heating systems. I don't want to become one, right? I'm not an expert in roofing and ice dams. I don't want to become one. Finding a good quality person you can talk to about it that's not going to rake you over the coals is important, and it saves you a lot of money, especially when costs are going up across the board.
Yeah.
So anyway, I want to start with a well, I'm going to call it a chart crime for the moment. So here's what we're going to do. So right now we are looking at the Japanese 10-year bond yield. Now, Phil, I'm sure you're no slouch when it comes to what's going on in Japan. You heard what's going on over there?
A little bit. I haven't followed it overly closely, but a little bit, yeah.
All right. It's basically this. This is what's going on. 2022 is at 0% for the 10-year, and now it's at 2.25. Now, ordinarily, you might say, whatever, who cares? But look at this rise. It was at 0, and then it went all the way up to 2. Look at this huge spike. That's crazy, right?
Mhm.
And this is the message that everyone's talking. Oh my God, Japan's going to blow up. The yields are going through the roof, and it's going to go straight up, and the currency is going to blah 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 blah. Right here, I've been literally hearing every single day. And look, this spike here in December and January, it's pretty big. It's pretty scary. Went from 1.6 up to 2.25. Like, wow, that's big. But they're not telling you is this. Pull back quite a few decades, pull back 50 years.
Right.
Here's the real chart, right? So where we are now is just a bit above where we've been for the last 25 years. Okay. Yes, from right around 2008 until 2022, it was going down and went to 0 for a bunch of years, but now it's back to kind of the equilibrium. Now, is it going to go higher? Maybe, but we don't know. What people are afraid of is that with the higher interest rates, that Japan's going to be in trouble. Oh my God, the world's going to implode. Japan's going to be bankrupt because they can't pay their interest. Yes, they have like a 400% debt to GDP. It is very dangerous for sure. But you know what? You know who owns that Japan debt? The Japanese.
Yeah.
So they're paying interest to themselves. The central bank owns like 40% of it. There's like another 40% is like pensions, and like the 20% there's like a very small percentage that is owned by international holders. So it's all owned internally. So are they going to go bankrupt? Probably not, right? Is the interest rates going to go through the roof? Probably not. I'm sure they could easily stop it. They could easily slow it down. There's lots of things they could do, and I'm sure they will. Um, but I will tell you that it's certainly a minor concern because who knows what's going to happen, right? Who knows if the international markets are going to revolt. Now, the fact that Japan owns all their own stuff is a big mute button on it. So really, there's 20% of the debt's outstanding because that's the only stuff that matters internationally. The rest of it's internal. Look, if the Japanese central bank owns like 80% of this, let's say hypothetically, they're not losing money, nor do they care what the price is. Right? It's just money circling in this. It's like putting money in one pocket and putting it into the other pocket. Right? It's the same thing.
Yep.
It's the same person. So it doesn't really matter in the same way because of how they've constructed it. But I just wanted to point that out because I've been hearing it a lot in the news, and I think it's important just to kind of keep that in mind. Any thoughts, Phil, on this?
I mean, the biggest thing that I'm thinking of as I look at that is the magnitude, right? Like, it's interesting when you say, well, it went from 1.5 to 2.25. That's a 50% rise. But when you put it in context of the longer term, it's really not out of character with where it's been for a lot of history. It's still low. Historically, that's still a low rate. And we oftentimes overreact when we see things like that happening. You have to go back and look at the bigger picture and see what's going on before we jump to conclusions. And you're right. Could it keep going up? It could. We don't know. We can't forecast the future with any degree of certainty. So we don't know. It's just something to pay attention to.
Yeah. Yeah, so I want to touch on a bunch of different things. There's a ton going on in the markets right now. If you've not been paying attention, please don't start now. You'll get overwhelmed. Um, there's a lot of stuff going on, and I'm going to touch on a few different charts that I think are interesting, and we'll get to the meat of it. But right now, this is a percentage of stock market of the U.S. stock market trading at over 10x price to sales, and price to sales 10x is quite high. Um,
Yes.
so we're higher than we were in 99. I think that was like 30% of the market was trading that. Right now it's probably 34%, looks like, somewhere thereabouts. Um, anyway, the point being is the stock market's really expensive. Now, I want to point this out because you're going to, if you don't understand this, you're going to get scared by every chart just like that I showed. Here's the thing. A lot of money has been printed over the last, especially over the last 5, 6 years, but certainly over the last 20, a lot of money has been printed and it just keeps accelerating. That money has to go somewhere. Where's it going to go? Right now, it's in the stock market. You can tell because there's a lot of tech companies that are, really expensive and, in terms of price to earnings. If you look at a company like Apple, which we always use as a whipping boy, Apple has, I forget what the PE is, it's like 32, and it hasn't grown revenue or earnings in the last 3.5 years. Doesn't mean it's a bad company, it just means it's not growing. And if you have a PE of 32, that means you should be growing at approximately 32% if you want to keep up. And it's not. So why is it that expensive? They're not the only ones, right? And they're the biggest whipping boy because they're one of, if not the biggest. Other companies at least are growing their revenues. Apple's not even growing. So, keeping that in mind is really important when you think about valuations. But, we talked about this a little bit last week. There is a big rotation going on right now. And if you're in tech, if you're an all in tech, you got to be careful because money is starting to flow out of tech into other areas of the economy. Staples is a big one. Utilities is a big one. I'm sorry, not utilities. Industrials is a big one. Energy is a big one. Those are
Yep.
getting the meat of the investment dollars right now are going in those areas. Utilities and utilities just starting to pick up right now. And was the other one? Healthcare. Healthcare is another one that's a boring stock. So if you think of the boring stocks, not the boring company, but the low beta boring stocks, cigarettes, alcohol, diapers, Kleenex,
Toothpaste.
the boring stuff, right? That stuff has lagged for the past 16 years, and now it's starting to pick up, which is probably a good thing. So if you're a value investor, go to town. You're gonna have a good year, at least the way things are looking now. But if you look at like last week, right? Last week we had earnings of Microsoft, Google, Apple, Amazon, pretty much all the Mag 7 except for Nvidia, which I think is a few weeks from now. But I think it was almost all the Mag 7, I believe, were last week or the week before, and they did not fare well at all. It was actually quite ugly. And if you look at tech, pretty much every big tech that I saw was standing. Google held up okay. They were down, but I think they held up okay. And I think Meta's held up okay. Apple's held up okay too. But if you think about it, like the sentiment around those are all bad, but the other ones seem to have hold up before. Now here's I'm going to share earnings for last week, and I'm sharing this because we showed the week before it was mostly tech. Last week you had CVS, Coca-Cola, Ford, Marriott, McDonald's, Kraft Heinz, Cisco. Cisco did not do well.
No, it did not.
Albemarle, HubSpot, Zotis, Coinbase. I haven't looked at all these today, but you had a bunch of these, right? You had AEP in here somewhere. Maybe that was last Friday. Anyway, so you're starting to see the stocks. So what we're starting to notice is that the tech stocks are all selling off hard. And the boring stocks, the low beta stocks, the staples, the the diapers and Kleenex stocks, they are actually doing fine. And utilities have actually done well. If you look at what's done well and what hasn't, it's surprisingly, here it is, AEP's right here. So if you look at these, surprisingly, it's pretty clear cut. Certain sectors are doing well and certain sectors are getting crushed. And so this is what we call a rotation. A rotation is, it's a healthy part of the stock market. So what happens in a rotation is the markets rotate. So we had all tech all the time for many, many years. You kind of forgot about rotation. But when tech goes out of favor, it goes into the boring stocks. It goes into utilities, staples, healthcare, right? Those are the defensive stocks, the staples of the economy. Then you have other areas that like, energy, industrials, and financials, which are a little different. But if you look at that, there is a cycle that happens in the markets. They cycle from one to the other and back, and usually not all quickly. Usually it's over a long period of time. But that cycle is normal. It is healthy. It is how markets work. You want to know why there's a broad improvement across the market? It's because it's not just tech anymore. It's all these other areas that are also companies. Yes, they're all expensive, but they're all a lot smaller than tech. So if people pull money out of Microsoft, because Microsoft got crushed, I think it's down like 30% from the peak or something. Microsoft got crushed. Well, where's that money going? Going into Walmart, apparently, if you look at the stock price. I'm going to share some of these in a second here. And let me pull some of this up. And all right, I'm going to share this here so we can kind of all talk about it together. Let's see, share it, and then I'm going to get Phil's thoughts here. All right, so here's basically the let's look at the 1 month performance. This is not the whole year. Actually, I can do year to date. Year to date. Here we go. So this is year to date. Come on. Year to date. There we go. So what are the areas that are doing well? Well, tech is clearly not doing well. Semis are doing pretty well. But look at all the other tech. Microsoft's down, Nvidia's flat, Apple's down a little bit, Amazon's down, Google's flat, Meta's flat. But these are stocks that go up like 30% a year. Well, what's doing well? Walmart's up almost 21%. It's been a month and a half. It's been like 5 weeks. And Walmart's up 20%. Coca-Cola's up 13%. Procter & Gamble 13%. Philip Morris up close to 18%. Costco 18%. You look at some of these stocks. Caterpillar's up 36%. Honeywell is up 24%. You look at all this stuff and you think, God, why am I in tech? And so my point is this rotation is happening even though you didn't know about it. Utilities, look at these. 17, 8, 12, 13, 11, 10%. Look at all these utility stocks are up, most of them double digits. Utilities are the most boring, non-performing stocks out there. They're basically a bond in a stock wrapper. That's it. And they're all going up a lot. So the way to think about this is, how are you performing right now in your portfolio? Are you evenly balanced, or are you overweighted in tech and expecting tech? Well, tech's down, so I got to buy it, right? It's cheap. Don't fall into that trap, right? That's not how rotations work. Rotations work cycle into something and cycle out of other things. Now, when you have a crash, that's not a rotation. When you have a slow decline, that's a rotation, right? And so what you're seeing is clearly rotation, and it's not risk off, it's rotation, which means that you need to be focusing in the areas that are doing well and focused away from the areas that aren't. Like software is getting crushed. I mean, look at these. Terribly. 30, 33, 38% drops. The absolute getting crushed. Intuit's down 39%. I mean, just like all these stocks, just absolutely crushed. So my point is it doesn't really, it's some of these other ones are, but point being is, if you look at all the tech that kind of, Apple Oven's not doing great. I mean, you can kind of go through this yourself, but my point is you don't need to be an expert in everything, but you do need to be aware of the rotations happening, because if you think this is this is high now. Wait until all the tech people realize, hey, we're done with tech, and then they start to flood out into these other areas. It's like putting a fire hose through a thimble. You have the most amount of, look at this size. This is based on size, by the way. Market cap is based on size in this. So by this, it's like 60, like 2/3 of the market is basically in tech, right? Just by this, just by this alone, right? About 2/3 is in tech, right? Well, if you have that 2/3 and people are leaving, where's it going to go? It's going to the 1/3. You think like, a 30%, you think a 30 PE on, I don't know what Walmart is, but if you look at Walmart and let's say it's a 30 PE, if you think that's high, wait till the money starts flowing there. It goes up to 50 and 60. That stock's not growing at 50%, but the money has to go somewhere. So my point is we have a lot of, I call it energy, right? The money flows, I think of as energy. The energy has to go somewhere. It's going from one place to another. It's going to these other areas very clearly from this heat map. So it doesn't mean you just sell all your tech and just goes running and screaming down the street. It means, thoughtfully reconstruct your portfolio so that you're in areas that are making money and you're out of areas that are losing money. I dipped my toe into one of the software companies last week. I was wrong. I got out and I'm waiting. I'm not going to try to pick the bottom. Much like crypto, if you want to know where the bottom is, just wait until no one's paying attention to it and everyone hates it. That's usually the bottom, right? When it's down, it could probably go lower, but no one's talking about it. Like it's just not news anymore. That's usually the bottom. It doesn't just happen in a day and then spike back up. That's not normal. That's a market crash. When there's a specific sector doing it, it usually turns into a whimper, and then some years later, it kind of gets back into.
This is a public service announcement. Hi, my name is Kirk Chisholm, and I'm with the government, and I'm here to help. Doesn't that sound reassuring? Well, let's talk about how they're helping. The government needs your help to make our money worthless again. PPP loans, student loan forgiveness, helicopter money. Let's keep the party going until our money is totally worthless. Don't think it can happen? Sure it can. Just ask Zimbabwe, Venezuela, Greece, Germany, Hungary, Greece, Yugoslavia. Did I say Greece? As a loyal listener to their show, I want to give you free money. I'm giving away free money in one of these hyperinflationary currencies. Go to www.moneytreepodcast.com/free money and follow the instructions to get your free gift. I have a large audience and only a limited supply of these currencies. I'm not the Federal Reserve, so I will run out at some point. Make sure you get yours before I run out. Go to moneytreepodcast.com/free money. Follow the instructions and get your free money today.
Anyway, I've done a lot of talking, Phil. How are you seeing all this?
Part of it, this is just another reminder of why we diversify. And there's something that goes beyond this that's not on this screen that I was looking at before. Check out international. Like if we go through last night, close, because it's not updated for today, but if you look at the S&P through last night was down like if I use an ETF, so it might not be exact, but I'm using ETFs here, was down 0.1%. Developed Europe was up 8.65% year to date, and emerging markets, excluding China, was up over 15. And if you include China and emerging markets, you're still at like 8%. So it's that too. And like you hear about this, right? We want to invest in, I want exposure to whatever it is that's doing great. And then when it flips, that's why we diversify, so that when it flips, it gives us some cushion and some protection. And we definitely are seeing a rotation. It's interesting to me that utilities are doing well only because part of utilities business, like something that's helped utilities, is a lot of the stuff that's going on that's benefited tech, right? Because AI requires a lot of power. And so the utilities have been spending a lot of money, but that's really what kind of set the market off to me in terms of these large tech companies. When Microsoft and Google and Amazon, and I know Google's not down as much as the others, but when they came out and said how much they were going to be spending, that's what really got the market. To me, that's what set it off. Like they had good earnings, but then they said we're going to spend hundreds of billions of dollars on CapEx, which is all the stuff that they're building so that they can implement all these AI things. And look, I use AI. I know it has benefits. I understand that. It adds to your efficiency. But we haven't seen the use case yet that it could be profitable, that is really like what it's going to do. And it was really interesting. I was listening to a podcast and they were saying that if you look at the Super Bowl, the ads in the Super Bowl this year, the most dominant thing in the ads was AI, right? If you go back to 2000, you know what the ads were? They were all the .coms. The last time that there was such a disproportionate amount of ad spend on one part of the market like that, it crashed. And I'm not saying that it's going to crash this time, but it's just an interesting thing to think about because there was so much money spent on AI ads during the Super Bowl, and the last time we had that kind of disproportionate spending on a sector related to the market, it was really bad for that part of the market. That's, we had the pet.coms and all those companies that no longer exist, or I mean, even Amazon, like that stock went to almost nothing. And then the other thing I'd love to say, so um, we think a lot of times we want to chase the stocks on the way down because they're going to come back. And you're right, we don't know the bottom. And a lot of times that's not the right strategy because we're trying to catch a falling knife. You can actually do better. Like the things that have gone up, they've demonstrated that they're good, that they're going to continue to go up. And like I'm not suggesting momentum per se, but just stocks that are doing well and companies that perform well, they tend to perform well over the long term. We can have pullbacks along the way, but you just have to be careful. You don't want to just start chasing them when they go down and catch that proverbial fallen knife because a stock that goes down 90% is a stock that went down 80% and got cut in half.
Yeah. Well, you can find that in crypto, that's for sure.
Yeah.
There's one quick thing I want to mention about that, and I'll get back to Phil here. One thing that's been happening, and I want to bring up this chart because I think it's not perfect, but it's as instructive as I could find because a lot of people don't talk about this. So if you look at crypto for the last X amount of years, there were you could get Bitcoin and Ethereum through closed-end funds. And then I forget when it was, 2023, 22, I don't know. No, was it 24, right? When
it was 24.
24 when Bitcoin went live with the ETF. But first, before that, Bitcoin futures were allowed. That was the first thing that was allowed, was Bitcoin futures. And then they had futures options, which were available. And then they had ETFs. And then they had ETF options. Now, what I find interesting, and I'm actually doing a lot of studying on this right now because this is not an area of the market that people look at or really pay attention to, but I've talked to a lot of people about this, so it's been, I think I've found some cool stuff in it. But when it comes to volatility drives prices to some extent. And if you looked at the price of silver before it crashed, volatility was through the roof. Well, if you have really high volatility, then a lot of people want to sell it because you make a lot of money selling it. So I remember during COVID, I'll give you an example. So I remember during COVID, it was right at the bottom of the market, right before the Fed came out and said, we're gonna goose it and we're gonna buy everything that's not nailed down. And the market started to rocket. But right before that, I remember looking at the options, and it was, I think the VIX had hit the highest ever. It was 80. It was the highest it's ever been, or tied to the highest. Anyway, I'm not sure it could get any higher. Anyway, so it was 80, and I was looking at the options like, this is crazy. I could sell a cash covered put right here and get 35% a year. I mean, literally, it was like a 12-month thing. I get 35%, which means that worst case scenario, if the market goes nowhere, I make 35%. If the market goes down 35%, that's where I break even. So like, I couldn't make any more than 35, but I have a 35 protection. So if the market went down another 35%, I'd be in good shape. That's really hard to beat. And that's at the money options. That's really hard to beat. I've never seen anything like it. So I'm just mad at myself for not doing it. But in hindsight, like, okay, when you look at, silver at the peak, a lot of big firms, and I suspect some of the banks, came in and started selling volatility. They're like, hey, we're making a lot of money here. Let's sell volatility. Why not? And everyone came in and just started pushing the prices down. Well, what does that do? It knocked the price down. And so when you look at things like crypto, there's still a lot of energy around crypto. It's dissipating. I'm actually trying to pull it up now. It spiked about a week ago. It's definitely come down a lot. But why do people invest in crypto? I mean, I'm just going to talk this frame, and we can talk about it next week. Why do people invest in crypto? What do you think, Phil? Why do people invest?
I mean, because they think that it's going to go up and that they can make a lot of money, and because it's done well, and like they see where, a lot of times they see where it was and they think it can go back, but it's speculation more than anything else, and they're speculating it's going higher.
Right. So I'm going to simplify what Phil said. They're willing to take risk, and they feel that crypto is the best way to do that. So if you're looking at 10 options, right, you say, I want to take risk. What do I invest in? Well, this one's going up 10% a day. This one's going up 1% a day. Well, I want the 10%, right? Because that's risk I'm willing to take. The 1% is boring. I'm going to put all my money in crypto because that's where the movement is. That's where the energy is. And so as long as the energy is there, people want to be attached to it. But what if the energy is not there, right? What if people aren't interested in crypto? What if it's not moving? What if there's no volatility? What if it's just dead money? It's just sitting there. Well, then people leave and they go find somewhere where there's hot money. So, one of the reasons I think that crypto lagged at a certain point in the fall is because the precious metals started to take off. People started putting money there. That was the hot money. It took off. Okay, well, those crashed, and I don't know if they'll go back, but anyway, it's certainly the volatility has come out of those. So, if I look at gold, volatility is picking up a little the last 2 days, but basically it's come off its high quite a bit. Silver the same. Well, no one's going to be interested in that because that's not where the hot money is. They want to go where the hot money is. Where is that now? So you have this game of hot potato that's happened in the last year. It generally doesn't happen this way, but it's so compressed because money's moving so fast that it's been compressed in that it hit, crypto, then it hit precious metals, and now it's in this new area, that we've been talking about, which is like the low beta stocks. It's starting to go into bonds. I've started to notice it's starting to hit bonds right now. It hit utilities in the last few days. It's starting to hit staples. It's been hitting industrials for a while. It's been hitting energy stocks. So where's the money flowing? That's where it's flowing. Like, so you see these things, they're just taking off for no reason whatsoever. And why are staples going so high? Why are industrials going so high? There's no reason for it. We didn't all of a sudden everybody just was a millionaire and they started spending money. It's the same thing. So understand that we're going to start to see these bubbles, these pockets in the economy where things just start to take off because that's where the money's going. So those are the kind of things you need to pay attention to. If you're trying to pick the bottom in crypto, don't, because if you look at any crypto cycle, the bottom usually ends up with no one paying attention to it. Everyone's frustrated. They're done. I'm not touching crypto ever again. This is a bad idea. And then people stop paying attention, and then 6 months later, it starts to spike up again. It's literally how every market happens like this. Gold, silver, crypto, doesn't matter what it is. Tech, it all does the same thing. Look at tech in the early 2000s. It spiked up for like 20 years and then 99, and it crashed in 2000. It took 3 years to crash. And then Microsoft didn't start picking back up until 2014. Cisco just eclipsed their all-time high, I think, back in 2000. It takes a while, right? And people forget about it. That's where you want it to be. You want to focus on the areas that are where the money's going, not where it was. Where it was, you're just looking in the rearview mirror and be like, oh, I could do it again. Oh, look at this. It's such a good price. Believe me, I get sucked into this all the time. It's a human nature thing. But I'm just telling you how to think about it. Like, you need to, like, I was trying to cherry pick the bottom of the software company. It's a good company, but it's, I was wrong, and I'm going to stop doing that. So we all do that, but just understand that usually it has to be a bottoming it out, and a sentiment has to get crushed, and everyone has to leave and stop paying attention to it. And that's when it's usually a good time to buy, not when it's going through the floor. It's a fool's errand, frankly. And if you pick the bottom, you're going to feel like a hero, and if you don't, you're going to feel like a buffoon. And why do either? Just move to something else. Focus on things doing well. Don't focus on the past. Focus on the future. So
if you hit the bottom, you're probably lucky.
Yeah. You're totally lucky. Don't think it's skill. It's not. The smartest people in the world, the best portfolio managers, don't pick the bottom. You can't either. Okay. Yeah. You have to admit the fact that you're not that smart. No one is. Not a single person does this. And if they could do it, then it would stop working. Okay. That's just how the markets work. So it's just not going to happen. So don't try. Just wait. You don't have to pick the bottom. It's okay. Wait till it's back on a roll, or wait till it's sideways or whatever. I still wouldn't invest in it if it's going sideways. Just wait till it starts to pick up.
Yeah.
Anyway, anything else you want to touch on, Phil, before we kind of wrap it up here?
I think that the two big things that I'm just going to add on to what you're saying is, first, the markets are moving a lot faster than they used to. Like, if you think about when we've had those downturns, it happened really fast. They're not as extended. The market's just it's moving faster. There's so much activity. And then I don't remember the exact numbers, but you talked about like Cisco. I think it was late last year, early this year. It hit a price that finally got above where it was in the internet bubble. Like, so many stocks, they reached a number, whatever that price is, that they never get back to again. And a great example would be Intel, right? Like, Intel during the internet bubble was up fairly high. It was much higher than it's ever been since. Like, it's chased that number a couple times, but it's never gotten there. Microsoft is a good example of an exception, because Microsoft finally, as Kirk said, like in 2014, it started to move and it passed its whole numbers, and it's way above where it was. But that's very unusual. Apple would be another one that, Apple was on the verge of extinction in the minds of a lot of people, and it did come back and it's far surpassed what it was. But those stocks are very rare. So many stocks, they hit a number and they never get back there again. There's a large percentage of them. So just because a stock reached some value, whatever that stock price is, doesn't mean it's going to get back there, because markets can be irrational, and the market can stay irrational a lot longer than you can stay solvent.
You want to wrap us up here, Phil?
Sure. But I'm Phil Weiss, and I know experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's Apprise Wealth Management. We'd love to get to know you. You can visit our website at Apprise Wealth. That's APPRISE wealth.com. You can go there and read and sign up for our weekly blog. Thanks for having me today, Kirk. Enjoyed the conversation.
Yeah, thanks for coming on, Phil.
That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.